Hello traders, welcome to Flow with the Markets Wednesday. Today is the 5th of March and the market has already moved more than what it did in January and February. Welcome to the trending markets, the Trump markets. A lot of news are coming out, tariffs, pulling out from Ukraine, NATO, this, that, fundamentals, and the market is really moving very nicely. So let's have a look what has happened pretty much since Saturday, since the weekly outlook, and see how the market has been developing so far. Now, of course, make sure to be checking the economic calendar because we're actually trading into an NFP week. Today, we're going to be having the preliminary NFP. So this is a report that is released before the actual NFP, and it does tend to drive in some volatility. And then also the services PMI. Trump is also speaking very often right now. And he's usually not on the economic calendar, but suddenly throughout the day, he just appears out there. So always make sure to be double checking and refreshing your economic calendar very often during the day. So getting into the DXY. Now, this is why I keep saying every single time on the weekly outlooks, right? Don't just draw biases. Don't just say, for example, hey, this is the daily bullish imbalance. We are going to go higher towards this liquidity point. Now, this is how the market really looked like on Saturday. It looked like we printed that very nice bullish weekly candle. We had this very nice daily bullish push, breaking structure. But also, as I keep telling you, structure is only confirmed when you have two higher highs to be created. This was just one, right? And you can see it was a very nice liquidity grab for the market to absolutely smash to the downside. And if you have been remembering since pretty much for quite a few weekly outlooks right now, it's been 2 months that I have been talking about that monthly bullish imbalance, right? Well, there it is, finally achieved. And I thought, of course, that the market could potentially push us higher from this weekly bullish imbalance. But then since this one failed and we saw this break of the reaction here with that bearish body weekly candle closure here, then I should have been even more convinced that this month is going to be reached, because that is how I literally trade in the lower time frames. This is how I flow with the markets, right? But on a weekly basis and forecasting monthly moves, this is definitely outside of my control. So we had Monday printing an incredibly bearish candle, and look at my expectations, right? My expectation was to have a pullback into that daily and then to potentially start going higher. But look at what the market is making the very first thing that it opened. It made a hourly bearish imbalance. So guess what? Am I longing from that daily? Absolutely not. If I'm going to be longing, I will first wait for that 4-hourly time frame to fail and to truly show me that it actually wants to go higher, and then I will take a trade from somewhere here, right? But no, the market just pulled back into it, held, and then since then it just has been bearish. And I didn't trade on Monday. I don't stress trading on Mondays. I just allow for the market to show me what it wants to do. And then pretty much the bias yesterday on Tuesday was extremely clear, and we literally crushed it in the community. I'm going to show you, of course, what we did. But currently, what is happening? Well, the daily time frame is absolutely melting. So we created that daily bearish breakaway gap. Is the market going to pull back all the way up? Very likely not. It wouldn't make sense. Today is also just opening and continuing to flush because Trump spoke overnight at Congress and he said some things. And of course, the market is just starting to dump after this. And we're probably going to have another daily bearish imbalance right now after today closes. And we're tapping into that monthly zone. All right. So as we're tapping into that monthly zone right now, it's starting to get maybe a little bit uncertain because we can start pulling back, or we can even break that monthly zone. Because what I found out from my experience, which is why I really love being a day trader, is that if you have, for example, that monthly zone and you expect the market to pull back into it and then immediately start going long, you're going to be disappointed. We could have said the same from this monthly bearish imbalance here. It absolutely destroyed it, because what really matters in the market is what is happening right now, especially with currencies. And even the stock market is different because it's forever bullish. But currencies, they're just really following the very recent market sentiment. And currently, it's absolutely bearish. So just because we're tapping into that monthly zone, that really doesn't mean I'm going to start looking for longs. No, I am still shorts. In 2 hours and 22 minutes, we're also going to be having a new hourly bearish imbalance to be created. And this is essentially what I would like to trade, because right now we're just getting a little bit too low. And if I drop to the 1 hourly time frame, and if I start looking, for example, in 22 minutes, we're going to have even a 1 hourly bearish imbalance right here. This to me gets very low. And you might have a situation where the market does something like this. You might take a trade from that very lower time frame zone, and then it might pop you into the higher one, and then who knows, might even go into the daily. Okay, so the current bias is definitely bearish when it comes to the DXY. I would prefer really to trade from 4-hourly zones. So for example, something like this that happened overnight. We had that beautiful 4-hourly bearish imbalance created here. It pinged it and then it flushed. Right now we have a new 4-hourly bearish imbalance being created. I would love for the market to pull back and then maybe look to short it from there. So that is the DXY. Currently, again, this is what I told my community this morning, I'm really not looking to trade right now because it's very low. I really don't want to be shorting a lower low. And the current market conditions, of course, have changed. We're getting some incredible pushes. So I wouldn't be surprised if something like this happens, definitely. But I always want to be selling high. So I would be looking for a deeper pullback. That is on the DXY. And then, of course, taking you on to EU. Look at my outlook. God damn it, this looks so wrong, but I'm really not ashamed with it because I took a long trade yesterday on EU. So again, I'm going to show you the point of always flowing. Like the first thing that you see happening on Monday is the market just massively started expanding. It broke above that daily bearish imbalance. And the very, very, very first thing it also did, like I told you here, let's see if it forms a hourly bearish imbalance to start guiding us towards the liquidity. Well, what did the market do? It literally opened, it gapped up, and it printed a hourly bullish imbalance. So guess what? At this point, I am absolutely not bearish. I'm literally looking to see, okay, are the buyers right now going to step in, or is, for example, this hourly bullish imbalance going to fail to then maybe start guiding me to these lows? But what we see happen, it perfectly tapped, respected, new zones being created. There it is. Tapped, respected, new zone being created. Right, tapped, respected, new zone being created here. So again, I said I'm gonna be very bearish on Euro USD on Saturday, but I've been extremely bullish this week. Right, you can see just the 40 time frame, it is absolutely going like crazy. In 19 minutes, we're gonna be having a new massive 40 candle to close. I'm gonna be waiting 4 more hours to see if we're gonna have another one of these 40 bullish imbalances, and then potentially give me a little bit of a pullback, and then look to long it again. I would even start preferring right now, because we're tapping into that monthly. I would really love to see a daily reaction, like to have a little bit of a pullback, maybe into this daily bullish imbalance that is forming right now, and then potentially look to long it again. But of course, let's see. So just to show you, for example, that I'm not talking trash, there is the trade that I took here, shouting it before it happens. There is the result, live execution, 1.8 R. That was also shouted in my morning analysis. There is yesterday. So I'll be looking for 1H, 4H on EUG gold for later today if they continues to expand, blah, 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 right? But I was definitely long, even long from, there we go, like GU is giving me long signal. I really did like EU shorts at first, right? But of course, as the market developed, then we get more clarity. And then of course, there we go. EU longs for Jacob here again with proof. We got some break evens. GU, there we go. GU 3R as well, live executed. Gold long here, that was a 1R trade, and where are the rest? EU long here, Tobias took a 1R. That's not bad. Gold longs as well. You can see it's all longs. Longs here for Keith as well, the same trade that I took. Longs here for Yassine as well. Another Nasdaq short as well here. But yeah, you get the point, right? It's not that I just kind of wanted to make that little point, because I do get comments from time to time, hey, like you're not really giving us bias. Well, I'm not supposed to be giving you bias, because again, as I jump in the morning on Monday and the market shows me something different, I'm just flowing. I'm no longer sticking to that same bias. Okay, so with my rant out of the way, this is how EU is looking like now. It's way too high. I would be looking for new hourly zones to be created, pullback, and then potentially continue with that trend. And GU is exactly the same. However, which is why I mentioned on my morning analysis on Monday that I'm more bullish on GU, is simply because we had that weekly, very small weekly bullish imbalance. And if you have a look a little bit on a zoomed out perspective, we also had that weekly bullish here. And the market tapped it and followed through with a new one. So this to me is bullish order flow. So then coming into Monday and looking at that daily bearish imbalance, I actually really looked for longs on GU. And I had some community members took the longs, but I was still confused on Monday whether, of course, which direction the DXY and EU are going to take. So I didn't really rush to be taking GU longs, but there was a beautiful long being provided from here. It was a weekly tap from the weekly. We also got a 4-hourly. That was a beautiful long. I had the member take this one. And then again, you can see like Monday closes and then we have been pretty much bullish. The very last thing we did is we tapped into this 4-hourly zone and the market is already expanding. So right now you can start looking to the left and just start asking questions like, okay, where is it reaching for? We just took out that weekly swing point. On the monthly time frame, we're also tapping into a monthly bearish imbalance here. So we have to start getting a little bit mindful that maybe some sort of a pullback could be incoming. So yeah, we're just tapping into this one. We've already trended a lot for if you have a look at the monthly candle, right? The monthly candle is already bigger than the last 2 months. It's not as much, but it's getting very close for just 2 days. Okay. So yeah, this is my expectations right now. We have trended for a very long time to the upside. We have pulled back into a lot of imbalances. I'm going to be looking for a new 4-hourly bullish imbalance to form after 4 hours. And then potentially in US station, I could be looking for continuations or even waiting more for tomorrow. Because if right now we form a daily bullish imbalance, we can start pulling back into it more in the long term and then get some high probability longs from there. So that's GU. Again, as I'm trading live right now, I am not looking to be trading EU and GU because they're already too high. And you can see Aussie dollar, for example. EU and GU are absolutely rocketing. Aussie dollar actually flushed here, and right now it's starting to recover a little bit. So is this a good pair to be traded right now? Absolutely not. Because fundamentally, it doesn't make sense. It doesn't make sense for the DXY to be absolutely crashing and EU and GU to be absolutely pumping. While this one to be bearish here in the short term. And right now it's trying to recover and follow what EU and GU are doing and follow that weak dollar, but it's chopped up. And while we did have that daily bearish imbalance, this is the only pair that actually played out from that daily zone. It actually tapped and fulfilled the target, right? Then it was very quick to immediately shift. So if you ask the question, okay, what is happening right now? The 4-hourly time frame immediately shifted bullish from the bottom here with these 4-hourly bullish imbalances, right? And right now it's starting to pop higher. Now, where is it going to go? This is kind of outside of my control. The next reaction area that we might have is this daily zone. Is it really going to potentially turn fully bullish because the Aussie dollar is fundamentally weak right now? Let's see. But the same thing that I'm going to be looking for right here, potentially 4-hourly new imbalance to be created after around 4 hours, a zone to be created right here, and then of course pull us back into it to trade long. That's it. Simple as that. You can use the 1-hourly time frame right now, but in this precise case, I used the 1-hourly time frame yesterday on the EU, but I had a good reason. Right now, I don't have that reason. But of course, if you are looking for more riskier trades, you can see for 1-hourly bullish imbalances to pull back, and then you can already look to take the market higher. So that's Aussie dollar. Also bullish bias. This is kind of the only potential target that I can see. And then also taking us into NZD USD. This one also tapped into the daily bearish imbalance, but you can see tapped and it failed to take out the low. Meanwhile, Aussie dollar took it. All right, so there is that famous divergence. And yes, we are also building bullish structure here. So I'm literally going to say that this daily zone is failing. We're having those same 4-hourly bullish imbalances, and I have the same expectations here. I'm waiting for a new one to form, pull back, and then keep going higher. If I talk about where the market could be going next, this is what I see, this daily bearish reaction area. And on the 4-hourly time frame, you can also find some liquidity points, but we don't even have them, right? So yeah, bullish bias on Aussie dollar and NZD dollar. Let's see how they play out. Now gold. My community crushed gold longs this week, even from Monday. Like I had so many members taking that long from here, but again, I was still indecisive because we're having like a weekly bullish, but then we're having a daily bearish. And when I have this conflict between imbalances, I always wait for one to fail. Now, of course, the weekly one was our hard time frame one, so the daily was supposed to fail, but I wouldn't really touch it before it fails, right? But I did have a lot of members taking longs from here, even taking longs yesterday on that very big pop-up, but we focused on EU and GU for the longs. So yes, currently what I can say, well, gold is just shifting bullish. We beautifully tapped into that weekly bullish imbalance. And this is what I tell you about weekly and monthly, right? We're tapping into the weekly. So what I told you on the weekly outlook is, let's see if the weekly is going to hold. If it does not hold, then we're going to look for the monthly. But you can see right now, the weekly is holding. The daily time frame is starting to pop higher for now, because that can also very quickly change. The market could just make a lower high, right? And then start dropping, but I don't care. right? I'm not just gonna go right now and say the market is bullish, it is going to take out this high. No, I'm just flowing. Currently, it looks bullish. I'm definitely bullish bias. I go to the 4-hourly time frame right now. What we had happening overnight is we had this 4-hourly bullish imbalance here, and then my very low hanging fruit target is going to be this high. Okay, and then even to the left, we have a couple of other highs that I will be looking to target. There they are. Then we drop to the 1-hourly time frame. After the market tapped the 4-hourly here, it consolidated during Asia and during late New York. It tapped it, but then it printed a 1-hourly bullish imbalance here. And if we drop to the 50-minute time frame, currently we are long in a trade like this. I have a member who is in a very big swing trade like this. But yeah, very choppy London session so far. I thought it would just very quickly expand to these liquidity targets, but so far it's really taking its damn time. I really don't like trading gold during London session, but when the setup is there, we gotta take it. So this is a gold trade idea right now, right? It's looking bullish so far until it does not, right? So right now, if for example this trade hits stop loss and we start printing bearishness, well, we're going to be very quick to adapt because the sentiment tends to change very fast right now. But currently on the spot, I am definitely bullish until proven wrong. We're having 4-hourly bullish, we're having the daily turning bullish. There is nothing to stop price from reaching all-time highs. We have very clear liquidity targets. 4-hourly bullish is in control. Now the key question is that if I go to the 50-minute time frame, Asia is still intact and we actually ended up taking out the Asian high, right? And that could give the market a little bit of a reason to maybe pull back and to take out the Asian low. And then maybe from there, we can start heading higher. So that could be another situation. But once again, when that time comes in, we're going to be here on the charts and we're going to adapt and we're going to look at all the zones that are forming. So currently, that is a setup on gold. If it hits stop loss and if it goes lower, we're going to adapt and we're just going to keep asking the questions, right? Who is in control? Are sellers really going to take in control and start pushing the market lower? Or is it just going to be a liquidity grab, right? And then the market very quickly rebounding with a new bullish imbalance. We're going to long that again. So that's gold. Bullish bias for now. Definitely long-term bullish, especially within the current stagflation that is being thrown around. I do agree that we might enter in such a period. Gold is a great hedge against that. Having a look at the JPYs, this one was pretty nice. So this one we had a weekly bearish imbalance here and the market literally popped it on Monday and it just went and took the liquidity. So if you weren't fast on this one, you probably missed that trade. But this is what I also always tell you. So for example, here how we started the week is we had a weekly bearish, but as we're coming into it, we had a 4-hourly bullish. So if you're rushing to take a short from here somewhere and you place your stop loss above, you get burned. Why? Well, because you're not paying attention to details, right? I'm pretty sure, yeah, there it is. The weekly got tapped here and it's already starting to trick you into shorts and then you get this tap. And if you just ask the question, why did that tap happen? Well, you're trading against opposing imbalances, right? And then you can see after that imbalance was already taken, the reaction was taken, then the market seamlessly flushed towards the liquidity, which was actually this fresh low. And then as we took out this fresh low, we suddenly printed a very massive 4-hourly bullish imbalance. Now, this is what I talked to my team in the morning. Is like, are we really going to be looking for longs on that one? It's also having that bearish to the left. It is sweeping very important liquidity. Like if I go to the daily here, this low is very important, December low. We took it once, we swept it twice right now. Yesterday's candle was a very big pin bar here, a very nice rejection. So do we have a reason to be pulling back right now? I don't think so. The DXY is absolutely crashing. So USD JPY should also be crashing, but somehow it remains stable. Maybe the Japanese yen has weakened a little bit as well. I'm just not interested in this pair, guys. I mean, there are so many better pairs to be trading right now. Like look at EU, GU, gold as well. This one, I don't like it. It already did what I thought it would do, tap the weekly and take out the liquidity. Right now, 4-hourly was bearish. Right now, it's bullish. When you start getting things like this, that simply means it's a consolidation. So let's see. Again, this is just the first structure break. Wait to see if the market is going to take over. Wait to see if it's going to make a new high with a new imbalance. And then on the pullback, you can then target the liquidity. But then you know that the market is shifting bullish. So don't just say, ooh, this is the bottom, let me go long. No, wait for the market to show you that this is the bottom, and then you're going to catch it. It's that simple. All right, look at that though. Euro yen. taking some massive liquidity again, that September 2024 low, collected it, and then it chopped for a little bit. But right now, suddenly something happened and the market just popped yesterday during Asia. We had that forwardly bullish at the start of the week, and then I told you kind of looks a little bit bullish, but then you can see it still pops higher. So at this time here, I could say that it's definitely starting to look a lot more bullish, but we also have to check out the weekly. Do we have anything bearish? No. Yeah, this one actually looked good for longs, because you can see as we're getting those long entries here, you really don't have anything to the left to stop price. But then there was a little bit of a chop here. We had that bullish, then we had that bearish, and you can see the bearish reaction got overtaken. Here we tapped it, we took it, took the liquidity, and then we expanded. So right now it's starting to look a little bit better for longs, because we formed that very massive imbalance here. It seems like, for example, Euro USD is getting very strong while the yen is starting to get a little bit weak, and we can see that within the consolidation of USD JPY. So let's see, daily bullish imbalance, is it gonna form? Are we gonna pull back into it? This right now becomes kind of a low-hanging fruit on the daily. You are potentially gonna have, for example, this on the quality time frame as well. Currently, we're just at a massive high, so I would prefer for us to take liquidity, pull back, and then start heading for the next liquidity target. That will be how I would tackle Euro JPY. It's giving us the clear bias right now, but don't long it at the high. Wait for pullback. And where do the pullbacks occur? Well, you can use so many things. You can use PD ranges, you can use demand zones, you can use support and resistance, right? You can use absolutely anything you want, right? I personally use imbalances, so feel free to use what you want, but this is how I would expect for the market to develop. GJ, EJ is better. Hey, look at that. This one is just very chopped up. It's also giving us some bullishness, but it's not as strong as Euro Yen. It also has this very recent forward imbalance, but it already tapped it and it already took the liquidity. So it's gone. I wouldn't really look for longs right now because it literally swept what was supposed to be broken strongly higher. So you can look for a pullback and then potentially new sort of alignment, but nah, I'm just not liking GJ right now. It's just fundamentally something is wrong with that pair. Yeah, I like EJ a lot more. Somehow, I like it a lot more. So I'm going to focus on that if I was trading JPYs, which I'm not. All right, indices. I had a shitty break even on the short on Monday, and then it flushed to my target, but I was scared because when Trump is speaking, I always get a little bit scared. And I wasn't really convinced to be trading on Monday. But again, you can see I was looking for longs. I said, okay, let's see if a forward imbalance is gonna form, which it did. But then again, Monday New York Stock Exchange opens and we absolutely dropped. And guess what? The first thing that I do is I'm short. I was short from here somewhere with a stop loss above. But I was trading on the 1 minute time frame. And then when the market failed to take out this low, I went break even. This one got me stopped out of break even. And then the market dumped. I really feel stupid about it, but I, again, wasn't just sure because the market was just tapping into that forwardly bullish. It could have absolutely went higher as well. I didn't know at that time, right? And then, of course, it flushed. It showed me what it wants to do. But yesterday, I didn't trade because the market literally opened and it took all the liquidity. So then I stayed flat and ended up chopping around. So yes, currently, I am buying a lot of stocks, though. That is the best time to focus and start building up your stock portfolio because we are overall having right now around a 7% drop on the S&P. Yeah, this is a very good buying area. I do believe it could dip a little bit more right now. The key question is, are we going to go on a downtrend? Is a crash going to be incoming? This is what we're going to see, of course, within the incoming months. But currently, yeah, it's just a downtrend. And usually in a downtrend with stocks, we tend to have rips. So this is called a rip. It tends to trick people that the market is buying only to start selling off again. So currently we made a very massive low. And we had that very recent forwardly bearish imbalance that the market pinged into, but didn't really do much. Yeah, and right now it's consolidating. So currently, again, for indices, I don't know. Like, honestly, I have no daily zones to work with. I have no full hourly zones to work with as well. The only thing I have is this high as liquidity. So if we make a rip and then potentially start aligning lower, I would definitely love to start taking shorts. But what if the market also starts recovering right now and starts printing bullish because we took some very important liquidity level right now? And usually after it takes such liquidity levels, if you study the past, right, when it starts breaking lows like this one didn't get broken, but when there are stacked lows on an uptrend and then the market takes them, that is what a dip does. Unfortunately here, this was not an uptrend. Within the last, again, couple of months here, we have been chopping at the top, and right now it looks like a lot of sellers are entering the market. So if that sentiment remains, if short sellers keep short selling, and if people start panicking that we're starting to drop, it's gonna get worse. All right, so I'm definitely longer term bearish, but if I start seeing the first signs of a recovery, I will definitely be the first one to long it as well. I'm already long, but on the long term. So that is ES. Nasdaq also looks pretty good. Like this one had a daily bearish imbalance. It just pinged it and just whoop, forgot about it. Very nice follow through. And also you can see it's starting to take also a lot of liquidity to the left, and you always have to be aware where you are, because yesterday I avoided taking a short trade literally because we collected these very two important daily lows, and I don't want to be shorting into them, right? Of course, on Monday, it was the same thing. We're tapping into that daily bearish, but we had a hourly bullish. And I really wanted to see first if that hourly bullish is actually going to fail. Okay. Yeah, it kind of came in, reacted, and I was in the short, and eventually it failed and it just dumped. So it took a break even on that one. That's okay. And then yesterday, again, the main objective of yesterday was to literally take these two liquidity points that I showed you, and then the market ended up retracing. Right now, what's next? We don't have any daily zones. We also don't have any hourly zones. So guess what? I have no bias right now. It could go lower, it could go higher. I have no zones to work with. So guess what? I'm just detached. I don't care. I'm going to wait for the market to open today, wait to see where it's going to guide me, what it's going to be doing potentially on the 1 hourly time frame, and then I'm going to make a decision which direction to pick. Because currently I can't really say if it's bearish or bullish. I literally don't have a single zone to work with. This hourly time from here was tapped and did its job. There is no hourly above. There is no hourly bullish. Nothing. Okay. So let's see. Unfortunately, I currently don't have a very precise bias on the indices. And as you know so far, I hope by now you have learned this about me. I don't care about bias too much. I just show up daily. Whatever the market tells me, that's what I do. Weekly bearish imbalance on US 30. Look at that. Absolutely textbook pink. Absolutely textbook flush. I think this one exposes very nicely this low here. So this gives me a lot more bearishness on US 30, which means that it could drag the other two with it, right? Monday very nicely bearish. Yesterday also very nicely bearish, but this is because financial stocks are dropping very nicely right now. I wonder why. Daily reaction area, the market is tapping. We're already getting the reaction. So if today, do we have a hourly zone here? Yeah, we do have one, but it's already tapped and it didn't do as much. So I would just say I'm definitely more bearish as well on US 30, but the current development, again, I don't have zones to work with. So there is nothing I can do right now. It's literally just chopped yesterday, and a lot of things could happen. We can come to sweep the high and then reverse, or we can just open like we have been doing on indices the last few days. It's just open and flush. Nasdaq has been loved to do this. It just opens and it just flush and it leaves you without an entry, right? So that's the indices. Not incredible clarity right now, especially how the daily and the hourly time frame are looking like. So again, showing up daily and looking at what the market is doing is going to be key. And then DAX, look at that. This instrument is crazy. It came in to take all-time highs, then it retraced again. It dipped very strongly, and right now it's already headed to take all-time highs again. Like, it's just crazy. I used to try to trade DAX, but I just don't like this. It's super volatile. It is a lot of times I don't want to say it's random, but it's just crazy, right? Massive flush. It suddenly like buyers were in control, but then there were the sellers, but then the sellers were failed, and right now they're massively looking to push the market higher. I don't like DAX. I like a little bit more stable instruments that are still fast, but this one is crazy. So I hope some of you are capitalizing on that very nice long development on DAX. I would just say right now, potentially all-time highs are the target. There is no 4-hourly zone to work with yet. Maybe there is going to be in like 6 hours or something. But looking at how fast it's headed towards all-time highs, we can even work with a 1-hourly zone. So in another hour, if you do have, for example, a 1-hourly zone here, this is how I would tackle it. Wait for a pullback during New York, and then potentially look for continuation higher. But I don't trade DAX, so don't listen to me too much on that one. So yeah, that's that. To give a recap, DXY is super low right now, so I'm going to be looking for 4-hourly zones to potentially get pulled back into for us to get a little bit of a deeper pullback, and then look for the short. So longs on EU and GU, also a little bit too high. Gonna be looking for, of course, for a pullback into a flowery zone and then go long. Aussie dollar and NZD dollar, they are very weak here in terms of that recent push. So it's going to be a lot better to be longing EU and GU instead of trying to long AU and NU. This is just fundamentally the case. So again, know which instruments to be trading, but they're also starting to shift bullish with some flowery bullish imbalances. Gold, I'm currently long bias. I'm looking for this high to be taken first, and then this high, which is where potentially I think it's going to be a good profit taking level. But it has been consolidating here within the last couple of hourly candles. So that's not a good sign, because when it chops like this, it means something is coming, and it means that it hasn't really collected enough liquidity in order to make a move. So I wouldn't be surprised right now if something like this happens, and then maybe we start picking up this theme. So let's see. Long bias on gold. Is it going to go higher from here, or is it going to come back down to collect some liquidity? Oops. Below these lows. Let's see. Those are my kind of two scenarios right now. Either pop from here or come back to collect the liquidity and then still go long, because I'm bullish bias. USD JPY, absolutely random right now. I would avoid it. Euro JPY, definitely long biased. Gonna be waiting for a flowery pullback here as well. GJ, just avoid trading that pair. It's something is wrong with it. Indices, currently the situation is very uncertain. We took a lot of liquidity yesterday. It could start rebounding a little bit higher, but it doesn't have any sort of zones to be working with. So I'm literally just going to be waiting for some zones to form, and then of course flow with the market. So that's that. I hope you are having a profitable week so far. I am, and my team is. So we keep looking to trade these volatile markets and of course focus on the good setups. All right. So that's for me. Let me know in the comments how you're performing, and I'm going to talk to you again on Saturday.